Hello, folks. We appreciate you coming and visiting our Winning the Game webinar today. I'm Dan O'Brien at Kansas State University, agricultural economist. I focus on the grain markets, grain and bioenergy markets predominantly. Guy, would you want to go ahead and introduce yourself?
Yes, good morning. My name's Guy Allen. I'm the senior economist for the International Grains Program, and my primary focus on the grain markets and agriculture in general is international trade and sort of the global situation. So you'll find Dan will tend to talk to the domestic situations, and I'll sort of take the lead when we move into the international arena.
Sounds good. Well, let's go ahead. We are ambitious in our agenda, what we want to cover. I'll talk for about the first half hour or so, and then shift that over to Guy and go from there. Try to be done by 1. Okay. So when you look at the grain markets, let's see here. Get our things advancing. A minute. There we go. Take a quick look at weather. It's a little bit soon right now to be worrying about planting, soil moisture, etc. But it's always good to put a marker down to see where we're at here at our here in January. So right now we have a situation where soil moisture in the U.S. predominantly through the key areas of the Corn Belt, some of the key areas, particularly Illinois, Indiana, Ohio, all of Missouri, fair amount of Iowa, some of Oklahoma, Texas are having dry conditions right now. Comparatively speaking, Kansas looking pretty good. Normally, when we see the darkest, driest areas over the last several years, it's been right over somewhere over the western half of Kansas. But right now, we're looking decent. And we're concerned, of course, about the global situation. And you see the key production areas of the world that we're looking at, and also some South African production. We'll talk about these as we go. So the world, when you look at North America and what we just showed, that's how the world sees it. This is from a NASA satellite image. Pretty dry in some important areas. The South America is interesting. You have this situation where through major production areas it's showing dry again, but that seems to be a normal situation from year to year. Note down in here around in parts of Argentina, some of these other countries, again, key areas of Brazil. Again, lots of moisture in Argentina, and their crop numbers pretty high as a result. Still, we've got soybeans first crop corn, soybeans planted in Brazil. Still no worries yet about weather conditions. The frequency of their rains have tended to mitigate problems year after year, but I guess the bigger question I always have is how many years in a row can you have a great crop either in the United States or in Brazil or any of these other major areas? So right now, not major problems. You see up here in Europe, Black Sea region, showing by this satellite image, pretty dry conditions. You do hear a little bit of discussion of that. Still, the harvest of those crops is down the road, but we're starting a situation where, hey, it's kind of dry. We'll see where that goes. South Africa is can be a significant player in world grain markets at times, exports. But we pay most of our attention up here into China, India. India doesn't export much. When they do decide to, it's out of the norm. But you can see some really wet areas, some dry areas here in China. Again, nothing yet at this point that's raising the attention of the grain markets, but still sure something to watch. And then, of course, you see Australia, and generally a lot of production in the eastern part, New South Wales, and those areas, not looking too bad. Some production in the west. And Guy, when we get to the international side, you can talk about that more later if you'd like.
Yeah.
Corn markets. I want to say a few things. I think that you see the January 12th report, you do see for March corn, the drop that happens about 21.5 cents. And the question in think market watchers' minds, Guy, in my mind, were will the market take this as a signal to go ahead and cascade lower, test longer term lows here back below $4 for the March contract, getting down to 380 thereabouts, something like that. But it didn't do that. From that adjustment, went sideways, and here on Friday jumped up to $4.30, making up. Oh, if you're into technical issues, that's about a 40% retracement, a 45, something like that. So took the one-time shot based on largely the increase in corn production to 17 plus billion bushels, and then move sideways to higher. Interesting to see that how the users aspect of the supply demand balance sheets coming into play. We're seeing some corn exports have remained strong. Ethanol usage still I think a week ago had the highest ever weekly rate. So on the usage side, still holding it pretty well. I've seen basically lower prices to some degree as a buying opportunity.
Just a quick comment on that corn price. That last USDA report was quite bearish corn, and corn was probably the most optimistic commodity, and we just really haven't recovered to that. When we get to the beans and wheat, we've actually recovered prices back above the pre-USDA report, but that big impact on corn and the coarse grains is just going to weigh on the balance sheet and the market for quite a while. And just to comment back on your weather scenario there, Dan, we really don't see a price premium in any of these commodities at the moment for weather concerns, even though
Yep.
we're planting in South America at the moment and extremely dry across Europe. So we'll see if that starts to evolve as we move into spring.
When you look at on a long-term basis here, there's that 430 and a half. You can see where that's at. And we certainly see that, and here of late, over the last 1 or 2 years, we traded lows about 385, 392, highs 519, really closer to $5. Then here coming in February, we'll put together our first representation of some grain marketing plans, and we'll be looking to set price targets in terms of where prices might go. So here you see that time frame, and I think generally we're going to be planning on we'll take a fairly conservative approach to setting those price goals to the high side. And when you go back to a time period when prices were fairly low, again, that 2014 through 2021 timeframe, coming off the 2012 drought, prior to the Ukraine-Russia war, we traded basically on the low side from about 309 on the low to, in most cases, about 450, 425 on the high side. So that'll inform some of our price goals from wherever we're at that time. And note that price range from low to high is about $1.20, something like that, $1.20, $1.40. Here we've come up, we have a little higher set of lows, and did get up to about $1.40 higher than the lows, et cetera. So I think when I look at where the grain markets are at, we don't live in a very nice, quiet neighborhood. There's a lot going on, but we don't break out to the high side unless we have major droughts, major financial issues, major wars. So when we put our marketing plan together, you're wondering about, well, you're trying to gauge, well, when do these big events come that drive us to these high prices? When normal supply demand reactions are out of the order, aren't what we're following. So we'll look at that. We do have some carry in the market from March futures at 431, 438 May, and we're down just a penny or so today as I look at that. 444 in July, then start to tail off into September. Highs 455 and for these futures. So given that we came out of December corn went off the board at 431. I was looking at the price back at the basically October 31st. It was we went off the board at 432. The October 31st is 431. So we're already in not making a lot of money on storage right now, and are wondering where we would go down the road. I think when we look at whether we're going to gain from storage or not, They'll be carry in the market, but what we're really hoping for is narrowing up of the basis. And we'll see here in a minute pretty wide basis levels. And note this 455 for D's corn futures that we're just about at the mode here now where once February starts, just in a few days, we'll take the uh, RMA, the crop insurance people, will take that the daily closing prices for the D26 corn contract during the month of February to get the planting price. And right now, that again 466. As I look here now, it's 455. Pardon me. That just about in the same mode of where we've been the last couple of years, down just a few cents. So we're kind of in the normal pattern. But note, using the same setup where you're looking at these corn futures, but the February averages for the plant projected prices, the harvest averages during October, that 10 out of the last 15 years, we've actually went lower. And which years did we not go lower? Well, the drought, 2012, then what led up to it in 11, and then Ukraine, Russia coming in later on. So absent major events in the grain markets, we have a tendency, at least recent history, of D's corn moving to the low side about 2/3 of the time. And did want to show you here just quickly that this is a corn futures. Look at managed money futures over time, and I see the basically January 2012 to April, well, to January of this year through January 20th, and you see the amount of trade this is managed money traders specs that that we're looking at their long positions in the blue and their short positions separately. 1 billion bushels, 2 billion bushels, 3 billion bushels sold positions, 1, 2, 3 bought. And what stands out to me is, again, when prices were really running up during Ukraine, Russia, we had almost no short positions. You could see at that time, record high positions coming into play. We here with only a run up to 502 recently, we set a new high record, 2.225 billion bushels, and that was actually earlier in 2025. And on the low side, set the record low of all time back when we came off highs in 2019 or so, 2.6 billion bushels. But what I note is that seasonally, these people are. It's not that their fingers in the wind, and trying to, but they do respond to volatility and threats to the crop, either production or usage, anything that would tighten up stocks in a regular manner. So this just shows, especially on the sell side, lots of volatility coming down off of this in here. We're down here now where we're just about balanced, a little more negative than long, and we're in January. So just something to watch. The volatility, the opportunities for sales for us, is a lot of people probably on here have or are associated with grain on that's being sold or in storage or hope to sell. And really our typical hope sitting here in January is to get through February and March, especially March, where we kind of choke up the volatility. Again, this being the lowest percentage of season average price and the highest in the blue. And then the 85th percentiles, we tend to have most opportunity from January on. Or January, we're right on 100% of season average price as we move off into April, May. So, of course, we'll have meetings here and these webinars through the end of February, March, all the way to September. So we'll be following this. It'll be interesting to see it. But there's a risk, and the risk is that if we get out to the time frame of crop production risk, April, May, June, and end up and see a good crop coming, no drought, no excessive floods, anything like that, we run the risk of starting that slide down into fall prices out in July and August. So we'll have some interesting conversations. We'll be weighing our options. We won't. There'll be a lot of questions, as there always is during these time frames. But but the time frame for looking at forward pricing is probably going to be geared towards this April, perhaps March, but April, May, June timeframe, when we tend to see in regular crop years some of our best opportunities to sell. Do you want to talk a little bit about, since this is a Kansas meeting, the cash markets? This is on Friday's closes. We saw the highest cash prices in Garden City at 406. Well, pardon me, the highest cash price, Pittsburgh, Kansas, down southeast Kansas at 421.10 under, 406 next highest, 25 under, and then some other decent prices just under four, and then basically 380 to 391, 396. New crop bids, the highest new crop bid 450. Of course, that's in the demand center, Garden City, where the cattle feeding along with some ethanol plants are. Pittsburgh, Kansas 435. Some decent bids, Colby and Salina, etc. So, put together marketing plans. We look at that. The question is, do those forward contract prices cover cost of production? They don't cover full economic cost of production. Do they cover most of direct cost of production? I guess we'll see. Basis levels, just want to show you this fast. See these blue lines down here? This is the Goodland, Kansas basis chart, Northwest Kansas. You can see the areas of the state. And we're starting 2026 at about 55, 60 under. That's basically where in the red where we finished up last year. And note in every one of these charts that the current basis bid is the weakest that we've got anywhere over the last several years. So a signal, I guess, a signal to the industry that, hey, there's plenty of grain around. Not a lot of I guess it'd be a buyer's market. If you don't buy that pile of grain now, then you can be pretty assured in a week, maybe even a month, that pile of grain might still be there. Guy, any comment on basis that you might see there? You'll have to turn your mic off, Guy. Turn your mic on.
Yeah, I was just thinking through with this cold weather that we're seeing. It's going to be, and with the low water we're seeing on the lower Mississippi, going back to your weather chart there at the beginning. Friday we saw good export sales of corn, 158 million bushels, exceeding the trade estimate by about 36 million bushels. So we're going to see stronger basis values at the Gulf. With the problem in logistics, given the combination of the cold weather and ice on the river, particularly on the Illinois, and low water on the south, it's making execution difficult. So, and with the weaker U.S. dollar, we should see stronger U.S. dollar world prices. The challenge is with the supply chain difficulties, it won't necessarily be reflected in Chicago. Because remember, Chicago prices are basically an Illinois River-based pricing point. That will flow over, and I think, and see stronger basis values in the Western Corn Belt, as rail will need to be substituted in for the lower capacity to deliver that to the Gulf for corn. So it makes me bullish the basis for the Western Corn Belt, bearish the basis for the Eastern Corn Belt at the moment till we get the weather situation and related logistics problems solved on that. So that's the thing I'd keep in mind for basis values. And this is in the wake of, good, historically strong export demand for U.S. corn, in spite of the very heavy balance sheet.
Yes. We're going to come back to that here. We're going to spend most of our time on corn because that's so critical, but not the only thing in play. Right. So corn acres. So the next set of data, next quasi hard numbers out of the USDA will be the prospective plantings report at the end of March. And the current surprise that happened in the last supply demand balance sheet had a fair amount to do, along with the yields, with the acres. Acres went higher, 98.8 million acres planted, a record high, 91.3 acres harvested, again, a record high. So that plus a record high yield gave us 17 billion bushels of corn. We were figuring about 97.3 million back in the August set of reports. Corn yields, the the USDA, when they do their long-term projections, they go back even further than this. They go back to 1970 and figure about a 2 bushel per acre increase per year. And this estimate includes the 186.5. And the challenge that industry observers have had is that, yeah, I see this, but when you cut this off and look at 2014 on, yeah, there's still some trend, but the highest we'd had until this year was 179.3, and then came in at 186.5. Of course, 186 was the top of the pre-report guess. They were thinking more like, well, it was 182 to 186, average 184. So when this came out, it was a surprise to the market, caused the well, I think we could wax long and hard on whether what people think of that number. I think one thing that's a surprise to me is not just the Corn Belt that came in at 200 bushel per acre on these key states, but you get up into these fringe states. Like again, Washington, 251 bushels an acre, 236 out there in Oregon, Idaho, 209, almost 198 in Arizona, almost 200 in Nebraska, 188 Wisconsin, 200 up in Minnesota, and I think there's another one down in here. Yeah, Georgia, 187, 180, 193. I regardless of the questions that have come up about how the government shutdown may have affected USDA's ability to cover acres, and that was a question asked. Then issues about other yield questions. Regardless of what you think about that, still these are the numbers now that the market's trading off of, and it probably won't change until we accumulate. If the USDA follows their disciplined approach, and they do have a disciplined approach, I would argue anybody that says that they're not, that they have a disciplined approach, they'll look at quarterly stocks numbers. We have the DEES 1 stock number. We'll look at March 1. We'll look at June 1. We'll look at September 1. By the time we get out to September 1 or the following DEES, then they'll see how much grain is actually in storage. And they'll know about what the usage is. And then they start to backcast and say, oh my gosh, we're either high or low or right on in terms of the size of the 2025 corn crop. So I think we're kind of, unless we've really missed something and we have way less corn than thought, and the basis starts to reflect something that, hey, this doesn't seem to be lining up with our balance sheet. That's kind of where we're at till we get out to September or DEES. Guy, any thoughts on that?
Yeah, just a quick comments on your production changes there from January. Notice that big increase. It's predominantly in the Western Corn Belt. And that's where we're going to have to carry the inventory. And that's going to weigh on Western Corn Belt basis through this whole marketing year and for some time. Whereas if you look at the Eastern Corn Belt, particularly the river states, that production really
so yeah.
So I think that's key to understand that Western Corn Belt versus Eastern Corn Belt situation, and that'll encourage us to look particularly at those basis drivers.
We kind of changed the paradigm with this report in that we're just deadly focused on the 3 I states, et cetera. And we pay attention to those other Western Corn Belt states and other fringe states. But this year they came through so strongly that it brought a big surprise. Can they in the future? So
yeah, the other key impact for that Western Corn Belt will be the corn export program off the PNW, because that's the primary driver on that. The PNW demand is looking a bit weak relative to the Center Gulf and the Eastern Corn Belt demand, particularly without Chinese demand in there. But I'll talk a bit about that later.
There's our 17 billion bushel corn crop supplies. Overall supplies 18.6, had never been above 16.9. And with this much corn, really, I think the surprise is that we don't have even lower prices or bigger stocks or lower prices. That we came in and have estimated that usage, well, for feed usage, 6.2 billion, highest we've ever seen. Ethanol almost literally tied with the highest we've ever seen, and we've had continued pretty good use. Exports 3.2 billion. The highest we'd ever had before is 2.7, and we're seeing that weekly basis, 50, 60 million bushels of corn. A lot of that's going to Mexico with the shift in cattle feeding in North America. It's happened because of the screwworm, and wet corn milling kind of sideways, 1.37 billion. Ending stocks 2.2, and historically, is look at want to see where that's at. That basically is where we've been at the highest here of late in any non-program year. So in essence, we went to the high of what we've historically seen for stocks, and are planning on usage at low prices to help clear up the rest. Here's the corn pace of export. Again, so weekly exports along the bottom, millions of bushels shipped. We have separated in terms of, so we have had a structural change in where corn gets fed in North America. We still feed quite a bit of corn in continental U.S., but now in Mexico especially, seeing a lot of corn usage, and it's having a big impact. Export sales, there you see Mexico buying 32% of U.S. corn. They have been the largest buyer for several years, but this is millions of metric tons. So almost really a third of our corn right now, corn exports are going there. And note, you'll see Japan holding in there, unknown shipments, South Korea, Colombia, others. You don't see China in there. Note, you see a little bit of sales to Venezuela, and of course some things happening there, and a little bit to Canada. To get through corn here, so you see corn stocks, again, ending stocks 2.2 billion bushels up to 13.6 billion. Note the last percent stocks to use. Last time we were in this neighborhood, 13.6 stocks to use, was back in 2019. Higher than that in some other years. So keep that in mind. We're looking at 2019-20 to compare prices. So here's where we're at right now. 13.6% stock to use, 410 is projected price. The last time we were here, we were at 356. Inflation, competitive pressures, you name it. But the $4.10 projection, at least is what we have now for prices, is about 60 some cents higher than where we were the last time we were hanging around this neighborhood. Just want to say quickly, I think there's about a 60% chance that the USDA is right and about a 40% chance that they're wrong, and mainly because it's just difficult to forecast. Either lower exports, we could come in about 250 million below where we're at and still be a record by about 200 million. So just having that change alone, changing stocks to use, you get instead of 13.6, you're at 15.4, and prices instead of 410, because things tend to flatten out when you have so much corn, about 395. If I missed the boat and ethanol is up by 100 million, exports remain strong at 3.3, and this is probably with the help of some crop problems down in Brazil. You end up with 12% stocks to use, closer to 450. But again, this one would need some help. It probably needs foreign crop problems in the southern hemisphere, and our competitors just not being able to come through on export sales, and other countries having to come to the U.S. because that's where they're at.
Just a quick comment, if I could add there, Dan.
Yeah.
Indications are typically we're about 69% sold this point of the year, according to forward sales. The thing I'd like to point out is a lot of people are skeptical of that big USDA numbers, but for the last 3 years, we've set, including this year, we've set a 3-year high on those exports. However, the final export number on average has come in 120 million bushels above the USDA January estimate. So while we're sitting here a bit skeptical, the numbers show that, we're still below what the final numbers should be. And given the pace that we're working at already and some recent sales numbers, I'd have to say, well, we're pretty much on track to come in on the final number 120 million bushels above this January USDA estimate. So even though with the big numbers and a lot of bearish news hanging over corn, that probably keeps me most optimistic.
Well, and if that comes about, there's 3.3 billion. That's not quite your 125, but that's 100. And if that's happening, the thing I wonder about, ethanol is moving pretty good. I wonder if that's low too. So
Yes.
we've at least got our guy. We've covered ourselves. We haven't been very brave. We said only about 50% chance, but at least we said it could happen. So
Yes.
anyway, we as economists, you have to be risk averse a little bit. So let's go on. Uh, Guy, I'm going to put this up here. I know we're going to talk some more about, but this is an international deal. I'm going to present it, and then you talk it how you want. Okay, on corn. So here's the world corn supply demand, looking from 2007 up to 2025. These are the latest USDA numbers. You show growth in terms of millions of metric tons, all the way through. You're pretty choppy based on crop size. And here's the through time in terms of production, 3.5% growth, 1 point, and the size of the crop. Again, anticipate take a large run up again in this year, remembering that the Brazilian crop won't be harvested till the spring. So we're counting on a crop that some of the second crop's not even planted yet, but the usage outpacing the production 3.7%, pretty consistent all the way up through there, and usage labeled basically even, slightly higher than the production. Exports going up and leveling off. And here's the big issue. This has China in it without question. But so here, when you have this issue going up in terms of total usage and stocks having topped out back about 2016, 17, in essence, sideways to lower, you've got for all world stocks to use a 13-year low of 22.4%. That's up a little bit even from last year. Again, you got China stocks in there. There's questions with that. Let me come in here and show the next thing. Here we go. Yeah. So here you got general trend sideways to lower. What do you think, Guy, in terms of looking at the world picture?
Well, that big stocks that China's carrying is important. And if you look at world less China, it's a lot
291
tighter.
minus 111.
Yeah, it's still tight. Go to your next slide. Talk to that, and then I'll make some comment on China.
Is that okay?
The world production numbers there. Yeah.
Yeah, corn producing countries.
Yeah. So talk to that, and then, or you want me to make comments on this?
Why don't you go ahead so I don't get in your way?
All right. The thing that I get that I'm concerned about is on world corn production is China. In the last 5 years, China's yield and corn production has been going up, even with no changes in planted harvested area, or little change. What China's been adopting some of the GMO corn. Previously they were pretty tight on accepting GMO traits. Now that they've got some ownership and own some IP, they're adopting that pretty quickly.
Hey,
And
GMO is not so bad.
GMO is not so bad if you own it. And you're seeing that response in Chinese corn production over the last 5 years continually to work up. So I suggest their yield is on that same growth curve that the U.S. is. And China is the second largest producer of corn in the world. So, and this year, our imports for China, I think, are down to about, I think it's somewhere between 4 to 6 million metric tons. I would suggest their corn imports are going they're going to become net even to maybe even a marginal exporter of corn in the next 2 to 3 years.
Because of
and
their
that's going to change
growth
those
and their
trade
production
dynamics a
potential.
bit.
Yeah.
So,
How about exporters? You want to comment on that, Guy?
yeah, exporters, your usual mix. Brazil, I think, is going to continue to be a rising star on that, as we're seeing with beans. U.S. is still going to be a dominant player in that. But that whole bioenergy sector and its continuing increase in consumption of corn for ethanol and energy production is going to be key. And I think that's a good thing. The challenge with the ethanol thing, it's driven more by government policy and state regional policy than it is underlying fundamentals. But that continued growth is in exporters going to become more dynamic, with Brazil as an increasing concern in that trade matrix.
there's a chart that I've got hidden in here. We've got, if you go online, we have this presentation, and Guy, I think something to watch. It's just a side note is kind of a subtle an increase that's happening even in domestic ethanol bioenergy production, even in Brazil. So I don't know that that'll ever get to the place where that competes with a lot with their export program, but it is a factor. So in a way, they're kind of behaving like us at an earlier stage where their domestic bioenergy is starting to come up. Still, Brazil is exporting a lot of corn.
Yes.
Um, Guy, let's, given the way this is going, let's go ahead. I'll hit these, and you hit your issues when they come, okay? Because I think we're gonna. Okay, so for sorghum, I want to show you sorghum cash prices. 376 Hutchinson, and note most other places far below that. Pittsburgh 441. There's one elevator that's a terminal elevator. It's a strong price leader down that part of the world. And I want to bring something else to point. We have slow grain sorghum exports so far, along with what China had promised. I'm getting this from Alan Featherstone, our department head guy. What so when we talk about soybeans, we'll get the message that China's caught up on their exports. They're starting to catch up, and you saw this from January 1 on, starting to come in. The purchase that it's either 5 or 6 million metric tons. There's about 200 million bushels of grain sorghum. So when we go back here and start to see that happening, you see at terminal elevators, Hutchinson and perhaps in Pittsburgh, a higher bid. It looks to me like that's a signal that some elevators are earlier in, or terminal elevators, exporters earlier into this, filling trains, and we'll probably see some up and down on that. I think this offers some hope for people holding grain sorghum at lower prices, that they may have some opportunities. Guy, any comment on that?
Well, we did see just last week we saw a little pop in sorghum export sales, and that should lend a bit of support there. But look, sorghum's cheap enough now in the U.S. We're pricing it in fairly aggressively to both the ethanol market as well as in the livestock feed market, and that's being reflected in our sorghum export sales to Mexico as well. Mexico runs off very similar economics at the moment as we do on their feed consumption down there. So I think that sorghum corn spread's pretty much as wide as it's going to get, and it's relying on those domestic consumption markets to drive that.
China dominates us. I tell you, again, January 1, late December. Again, we were slow catching up because of the government shutdown on data. But here you got China historically has bought about 95% of the world grain sorghum exports. And here suddenly this what you see here is a dramatic change by January the 15th from what we'd seen about 3 or 4 weeks ahead of that. So it looks like China has decided to get involved in purchasing that. So, and Guy, you give a better explanation of this than I do. So China's attributed to 47%. When we call something unknown on the export side, what's that? Why
Well,
is it called unknown?
just two comments. One, China's imports have been most recently coming from Australia and Argentina, and that supply will probably run out about March. But unfortunately, that hasn't necessarily been U.S. purchases as we have hoped. On the when China buys a lot of stuff from the U.S., a lot of times they will buy it on a FOB, free on board basis, rather than a delivered CNF basis. That actually gives them the flexibility to trade out of that purchase at a later date and send it to an alternative destination rather than China. It could be going someplace else. So and when countries buy on a FOB, or a trader buys on a FOB position, it's listed as unknown because they don't know what that final destination is until it actually ships. And that's usually when it gets changed.
So the frustration of farmers in the U.S. is that, well, yeah, they bought this amount of grain here, but then they cancel it. They cancel the ones that haven't been designated yet, that are still found in the unknown category. Is that right?
Well, they aren't necessarily canceled, but for instance,
Or
China,
shifted somewhere else? Yeah.
yeah, ship it someplace else. So those FOB purchases may end up going to Mexico, Spain, some other destination. They want to maintain that arbitrage opportunity. They want to put on some coverage. They just don't want to declare where that final destination is if it's on a FOB basis.
We had a question come in. I saw it pop up on the chat. Why is the unknown such a large percentage of this at this time?
Well, that's the trade's maintaining a lot of optionality in that, in the fact
That's
they're
a very
hoping.
polite way to say some other things, but go ahead, Guy.
Yeah, well, and they're anticipating maybe China will come into the
Oh,
market
okay.
in the future, so they've locked in a purchase, but they want to maintain that optionality on its final destination, and they're buying it on a FOB basis rather than a CNF basis.
But with what you'd said, note Mexico is certainly in this. Spain coming in pretty strong, and
Yeah,
some other countries.
yeah, and particularly on your water purchases on Center Gulf or Texas Gulf, it's not unusual for it to trade that way, particularly if they're locking in some forward commitments.
And as you said, Guy, in terms of who's exporting, this is that 225 million bushels uh, plugged in here. United States, 57%. Australia, certainly in there, and Argentina. So it is
Yeah.
what it is.
And keep in mind on China particularly, they're playing political games in there as much as they're not always. China doesn't always operate as an economically rational trader in the marketplace.
Okay, moving on after that statement. No, they're very shrewd. They're
Yes.
very, very shrewd buyers, and they look for advantages. So it's the way to stay. Guy, let's talk wheat, then we'll talk soybeans, and get us to the end of this, if that's okay with you.
Yes.
Okay, let's do it. Wheat, uh, wheat prices actually, now they're not very high, but their pattern isn't as unhealthy as some other commodities. They've actually see they're here of late on Friday. But this chart happened to get it off a source bar chart. Uh, they had a big run up. Their relative strength index jumped to 60-some%. That's really a pretty bullish deal. Question will be, and they were down today. Once the traders tend to pay attention to recent history, once they get up to 550 or so, do they slow down? And it looks like again they're down some. And we'll put together a wheat marketing plan as well as we are for corn, and you can see here that when we've here of late, we had a low of 503, about 540 now. We had gotten up here recently to 643, 746 in the last year or so. This more conservative time frame we've been trading, we had traded a low of about 395, 381, highs about a few highs, 577, 626, a lot of time spent more like 525, 550 more so. So that'll inform us on our price goals that we'll be looking at on a marketing plan. And some carry, again, noteworthy that July futures, 564 is where we're at right now. And we had for crop insurance a 561. That was back, I think, for Kansas, it was August 5th. August 15th, September 14th, something like that, for this July 26th wheat futures contract. So 561 here and 564. It looks like, unless we get a surprise, it's going to be a sideways thing. Those prices lower than what we've seen here of late for planning. So not a bad price, but is what it is. And note for wheat, it's more of a coin flip. In terms of where the markets go. Here, 8 of the last 15 years, we had price declines, which means 7 of the last 15 years, we had price increases. Much less predictable in the wheat market from the previous fall to the next summer with regard to what price direction will be. Just want to show you quickly, pretty bullish neighborhood right now for wheat, even with some of the movement we've seen. Generally, when you look at the bearishness of the wheat market here for about the last 1 or 2 years, specs have been on average more pessimistic with their sell positions in the Kansas City hard red winter wheat than they have on the long side. However, here of late, we've had some movement to the high side. So, Guy, since I don't know exactly what's going to happen to wheat, I'm tempted to throw it to you to see if you know what's going on. But hang with me here. So,
Yeah.
notice the cash prices. Do you see again some wheat movement, hard red. So we see a Topeka bid 506, a Hutchinson bid 501, everything else at 450. To me, those are strong export areas. Probably, and notice that the basis 36 under Topeka, 41 under Hutchinson, 80, 90, 87, 90 or so elsewhere. It looks to me like we've got some export movement in some key locations, but not enough to bring the whole ship up. Thought, Guy?
Um, yeah, look, we'll see those basis values improve as we approach March delivery period over the next 30 days or so. Um, it's hard to get real optimistic on flat price corn, wheat prices. Again, I'll come back to say I would suggest corn's probably going to leave that. But the good thing we've seen in wheat, we've seen wheat prices recover from back to above the pre-USDA report. A couple weeks ago. So that's good. We have some strength in that, and the hard red winter wheat export program's been probably better than anticipated.
Guy, we're going to get to the export numbers, and at that, if you want to comment on the value of the dollar, because that's going to tie into that. So just hang with me. Planted acres, not a lot to yell about here. 7.2 million acres to be planted, coming out of the January 12th report. Winter wheat seeding, winter wheat canola seeding. Overall, in the United States, down 0.5%. So not much change, really at all. U.S. wheat production, we part of our issue right now, price wise, has to do with this hard red winter wheat. The last couple of years, especially last year, 804 million bushels of production. Exports are hard red, 320 million, outstriping, outpacing other classes for sure. And you see all U.S. all wheat exports, all classes thrown together at the top of the range where we'd been. And hard red springs having a pretty good week or two. Here's hard red, had been running to the top and now still moving along, but receding some in terms of pace. Guy, any other comments on wheat exports given what you've seen here?
Yeah, nothing to really add at this point, Dan.
Okay. So stocks to use for wheat trending up, prices trending down. You know, economic forces, but this 45.6% stocks to use figure, basically for every 100 bushels of wheat that we either mill or export, we have 45 sitting in storage. So that's a burdensome situation. Note when we got back to this area last time, we here back in 1920, 2019 and 2020 marking year, about 49%, 458 price. We're just marginally above that now with 490. So yeah, we're, lack of scarcity affecting prices. And for wheat, I in kind of a not a very brave way to say this, there's about a 50% chance USDA is right, and we could go higher or lower on exports depending on what happens, plus or minus 50. With stocks used instead of 45, 46%, 49 if we're 50 million bushels short, 42% if higher, but it would affect the price to the downside by about 25 cents because you have a lot of wheat, not a lot of change. But if we did get stronger exports, it would probably take us up more in more responsiveness to above $5 up to 5.60 thereabouts. Guy, I'll do this again and let you take this on for world wheat. Stocks to use again, production moving up pretty well, pretty optimistic for this year, 842 million. Usage pretty strong, a little lower than production. Exports leveling off. Stocks to use. So here you have pretty good growth in total use. Stocks not going much higher after about 2019, 2020, and then had trended down a little higher here. So what we had here for stocks to use was an 11-year low, but we're not anticipating that's going to keep going lower and seeing a different situation now. Any comments, Guy?
Well, talk to your next slide there, and then I'll make a comment.
Okay.
The world less China. So there you go.
This one?
Yeah.
Okay.
The comment here is, look, we've got extremely comfortable ending stocks for wheat. Even when you look at world less China, it's still a very, very comfortable number. So it's just very, very difficult.
139 million metric tons.
Yeah,
So,
it's just difficult to get very bullish wheat unless it's getting support from the feed grain sector on that. Would be that's basically my salient point on wheat.
okay. Right. Okay. China does like to save stocks, but there's some uncertainty about what is actually there or not. It's more of a government overall number. So I just flipped through these global wheat producers: European Union, China, India, Russia, United States, Canada, Australia. Exporters: Russia, strongest one. They need the currency. EU follows Canada, Australia, US. China, not an exporter. Just kind of is. So we get frustrated in the United States that we don't have a lot more market power in wheat, but we're the one, two, three, four, fifth rated exporter, and we just have a lot of competition. And I've got information here showing declining Ukraine exports, Russian exports after the high about 2 years ago. So any comments there, Guy?
No, nothing to add there, Dan.
Okay. And we've got time to finish up soybeans. Okay, here we go. So soybeans, after that report, they had gone down. They've come up. Basically, they've recovered to about where they were before that report hit. Closed at 1072 here on Friday. Back over a little bit positive on the relative strength index. Basically back to normal. Note here the soybean markets have lows of late about 947, highs 1169 here recently. So about a $2.20 range. You look historically when they've traded, again, lows around $8, highs up towards 12, but a lot of time spent around 10 and a half, 1075, something like that. So when we put together our soybean marketing mode, we'll pay attention to this, but have an eye towards, hey, what if we have a breakout? But a breakout of some type is probably going to either be China's refused to buy from the U.S., kind of reversing that trade deal, or we have a major drought someplace. A little bit of carry. There's, I think I have the wrong. Yeah, I'm looking at this. It says July. Really looking at 1082 for November beans, and so we're going to come into February. 1082 would be higher than what we had last year for a planning price. So we'll see how that holds up in February. And Guy, I wanted to show you this. I thought you'd be amused or impressed or wonder how it happened. But when the U.S. and China, and when there's an announcement that China had agreed to buy soybeans from the United States, we had this spike in long positions to a record high 1.3, 1.4 billion bushels long beans, and you note the corresponding negativity went away, and then when it was slow coming, then we dropped off way below half of that. So this is the up and down of what's happening in the soybean futures market and trade.
Yeah. Just a comment on that, Dan, is China's basically fulfilled their commitment for that 12 million tons of soybeans here by, I think, the end of February. That's essentially been covered in the marketplace, and we've seen that shift back down from your trader position from long to increasing short. It's going to be interesting. I sort of suspect them to switch back to China as soon as possible. During that period, we were seeing about a 15-cent bushel premium of U.S. over Brazil. That's starting to fade there a bit. And, last year they were buying soybeans uneconomically out of South America, 50 to 60 cents a bushel premium for Brazilian over the U.S., which just didn't make any economic sense.
Well, it made geopolitical sense because
Yes.
they were having an argument with the U.S. over trade negotiations.
But they have fulfilled that undertaking and commitment of 12 million.
And I verified this morning with Alan Featherstone as he watches trade closely. They have a commitment to 2028 to buy 25 million metric tons per year.
Yeah.
Now they had been buying about 29, so it's still under where they were. But for them to be in the market again, they bought 12. They're committed to double that and go a little bit more. So if that happens, that's generally supportive of soybeans, soybean exports in the U.S. So let's go on. So again, we're being close on time here. Uh, just like for corn, we're waiting for weather issues in April. If anything, a little bit more into May and June, and then wary if we for forward pricing. If that doesn't come by June, then there's a tendency by July and August to start to tail off. So that's the risk proposition that we're in right now. And we do see even with beans, you see a differential of where, well, for Topeka, Hutchinson, Pittsburgh, $10 or just under $10, particularly Topeka, a pretty strong bid for uh, for uh, for soybeans. And again, note other again Colby, Salina not running up with that. Garden City, of course, not in the middle of all that, but at our export, some of our key export positions, we're seeing some pretty hefty bids for for uh, for soybeans, and that would be consistent with some decent exports. Acres, we'll be wondering about exports. Acreage again. A lot of the market talk is that we'll see increased soybean acres, lower corn acres this year. This we've thought that for about 3 years running, then got to prospective plantings and acreage reports and reversed that thought. So we shall see. Soybean yields record high again, also with the corn 53. Same factors going on there, and you can see where the yields were good and where they weren't. Uh, Soybean exports, and here, Guy, I'm going to run through a set of slides and see what you think. Soybean exports had been running below where we've been the last several years. If with the Chinese situation coming in, that would be improving some. We shall see. U.S. soybean exports to China. Now note, this is as of the 15th, 9.4 million metric tons. They committed to 12. So and these others are probably still in the pipeline to come. They might be over here an unknown, not sure. But so soybeans, China for sure, Mexico, and then a host of others, particularly Japan, Indonesia, Asian countries. Any thoughts on that, Guy?
Yeah, the challenge the U.S. have is continue to diversify its customer base. Keep in mind, globally, China's over 60%, nearly two-thirds of that global oilseed trade. So with the U.S. is basically 30%, less than 30% going in there. So we continue to work to diversify that customer base, and that's hard work.
Then
It's good to see Mexico in there. Egypt's another key one, as well as Japan, Indonesia, Taiwan, and those other Asia destinations.
it's thought provoking. The number one export the United States has to China is soybeans.
Yeah.
The number one export, so it's a big deal. Uh, and just to finish up here, note the lower trend in U.S. exports, the upward trend of soybeans, the upward trend in crush, and accelerating. Some of that a lot of that has to do with biofuel. And by the way, we've got some pretty good soybean meal exports and periodically good soybean oil exports coming too. And note, so generally moving higher for ending stocks to use following that. So that's probably an explanation as to why we don't have $13 soybeans, and that we generally have more beans around. And note here that there's that percent stocks to use going higher, prices generally coming down off the highs that we'd seen several years ago to closer to $10 base. And just quickly, 60% chance USDA is right, 20% chance lower exports, 20% chance of higher exports. So out of this top end, if usage continues to go higher, maybe what you said before on corn is right, Guy. If that's the case, say we gained about 35 million, at least 35 million higher for that, and crush goes higher, then you're down to 6.5% stocks to use instead of 1020, closer to 1140. But we'll see. Let's get to the international side of this real quick. So, Guy, I'll give this to you and go where you want to with it.
Um,
Again.
Yeah, look, I'd say in the whole dynamics, soybeans I'm least bullish are probably the most bearish on that. It's just hard to be optimistic the soybean outcome. Um, we're going to have to see exports lead that, but I remain a bit pessimistic on those export opportunities here at the moment, particularly with Brazil's big number and unless a weather premium comes in down there for dry weather, it's just hard to get optimistic that oil seed
It,
situation.
it does seem like we're dependent on some type of southern hemisphere weather issue in those in South American crops to bring us to anything.
Yeah.
So let's see here. Uh, Guy, here I had promised you at the end you'd have all this time to talk about this stuff, but we got talking together, and I guess I didn't know what I was talking about. All these things we've talked about domestically. Do you want to mention anything of these
Well,
other issues that are out
well,
there?
we touched base on the logistics, both river and rail, and the cold weather, and that's probably the issue most at front at the moment. Um, the one thing I'd like to go to in a couple minutes we got left is the foreign exchange and what's happening today in the and this is being driven by the geopolitical situation. We've seen the U.S. dollar index drop down below 97 this morning. Um, and that's and in the same situation, we've seen silver reach new highs, trading above $115. We've seen gold also reach new highs this morning. It's trading above $5,078 an ounce at the moment. That's in the wake of weakness there. That's being driven by the geopolitical situation. Don't have time to take a deep dive on that, but sure would like to at some point. You would think that the cheaper dollar should be lending support to commodity values, but we're not seeing that right away here where prices are trading in Chicago today. I think it's the underlying fundamentals that Dan's just gone through, which is really weighing pretty heavy, particularly the ending stocks to use situation in the U.S. across all those commodities is really what's weighing pretty heavy on that. I generally think corn's going to be the most optimistic opportunity to see a rally, but that last USDA report really threw a lot of water, or more to the point, increase ending stocks weighing on that situation. And so it's going to be a challenge or take a little more time to work through that. But with the export situation for corn still remaining pretty optimistic, that's good. One thing I'm saying specifically to a lot of these end users, and the biggest challenge for our corn producer is how often you get a time to buy an opportunity to buy commodities below the cost of production. That's frustrating our grower community here today, specifically, but I think it's a significantly good opportunity for a lot of end users, whether it's domestic or export driven, to be putting on some coverage there.
If they for us in overall for the industry, buyers and sellers together, the moderate to low prices are building demand base, or building plants for establishing customers. So you can have some long-term benefits, particularly if we come around and don't have a 17 billion bushel corn crop, even a 15 and a half, given the usage that we have. Then you're in the next step could be much better price wise, but it's harder to suffer through it and survive it right now in the short run.
Just two other comments. You've got the Fed U.S. dollar indication up there this morning. There's indications, stronger indications, the Feds are not going to raise interest rates or change interest rates in this next round. The other thing that's probably more concerning is current data showing somewhere between a 78 to 80% chance of a federal government shutdown by the 31st of January. That would not be a good situation there at all for markets. That when we shut it down the last time, November, that was 43 days. That was a record long government shutdown. So we'll be keeping a very close eye on that this week. They have
How,
6 of the 12 bills passed that they needed to, but the other six still are being negotiated.
However, coming out of that last deal, they cut a deal that the USDA will not shut down if they come back and do
Yes.
it again. So we'll still have USDA data, and that'll be
Yes.
welcome. Any early guesses for new crop planting intentions this spring for the 26-27 season? Um, well, I know the process is USDA will come out first in their outlook conference, and I would guess they'll probably be pretty milk toast, pretty lukewarm. Probably anticipate higher soybean acres. And when I look even at our forward contract prices, I don't have them up right now. Forward contract prices for uh, around the state for corn versus soybeans, they all every one of those except for the Garden City, they all favor soybeans, every one of them. So, and some by quite a bit. So we'll see, and that's not just the futures. That's a basis adjustment new crop bids. So I think we'd probably go with that by 1 or 2%. But then again, like we get in the field, we get going. If economics during the middle of that are positive, we have tended to start with that point of view and then end up and raise corn acres later on, just because in the long run it's our comparative advantage. So going to be hard to row against. Ultimately, at the end of this, strong corn usage again, 3.2, or this guy was talking about 3.3 or something. Exports, a big issue for us. What happens? Do we continue these exports down to Mexico? And it's really more of an issue for Glenn Tonser on the livestock side to wrestle with. Do we for corn producers, if they feed it in the U.S. versus Mexico, not a lot of difference. For cattle feeder, if we're feeding down south the border instead of here, that's structural change. So right now, so you asked me a straightforward question. I danced around it. I think up front they'll say greater soybeans, but eventually we sure had this trend to end up and adjust early expectations to go higher corn as we go on. Guy, how about you?
Yeah, my comment would be your Illinois or your Midwest grain grower likes to grow corn, and where I've always been wrong on my guess is favoring soybeans on that question. So I'm going to have to lean a bit stronger to corn situation, and we'll see how the. I don't expect a lot of change in the market dynamics between now and April. It'll probably happen more in July, but I was still leaning a bit more to corn.
That'd be my thought. I think the upfront numbers will be neutral to more soybeans, but we'll see what happens. Last thing I'll say, again, next time we'll start out following good friend and colleague Mark Nelson for what he had done here in past years in shepherding grain market grain grain marketing plan development pre-harvest wise. We'll have those here in February, and some of the things we talked about for price ranges will be incorporated into that, and we'll go from there and see where that puts us then. So we'll start that end of February.
All right. Well, I'm not seeing anything else, so I think we'll go ahead and close it down for now. Dan and Guy, thanks for presenting this. Folks, we appreciate you being on, and we'll do this again in another month. We will also have some other webinars coming up in February with our Ag Profitability series. So I'll be sending an email out about that on Wednesday. I think I'll get around to that. So thanks. Appreciate it all, and we'll catch you another time.